Hello everyone and welcome to this edition of the weekly video markets update from FBS.com, and I hope that you guys survived the major volatility move that we saw over the past few days or since the end of last week. Today's video will be very short, and even without headlines, we're not going to even talk about, or we're not going to be putting even any kind of music or any kind of CGs. It will be very short and, as I said, without any headline, as there was a notable development by the Federal Reserve, which I believe that it will be, or it is the most important development we have seen since the beginning of the EC policy by the global central banks, which is likely to shape the market over the next few months. Bear with me for one moment. I'll be right back. First, for the past few days, markets experienced a notable volatility across the board. We saw a notable sell-off on Friday, and then markets recovered on Monday, then another sell-off yesterday, Tuesday. And now, and so far at least, in early morning hours in Asia, markets some sort of is recovering again. So the big question here, what really happened, and what is the most important thing that actually happened over the past few hours that will shape the markets? Let's start with what basically happened on Friday. South Africa reported a new variant of COVID-19, and they are now calling it Omicron. And such news was on everyone, or such news was actually published on every single media outlet across the board. The initial headline was that they found a new variant, but we are not sure yet that the current vaccines will be able to fight that variant. Traders and investors thought it was the end of the world maybe back then, and we are back to square one. So here's one thing. During the weekend, there were multiple reports about new cases in many countries from the same variant, such as Spain. We saw Japan closing also their borders, Sweden, and even in the UK for people with no history of traveling. And even some countries decided to implement new restrictions just in case. Yet, what saved the markets on Monday was multiple medical reports from multiple vaccine providers such as Pfizer, who said also, right at the beginning of the Asian session on Monday, that it is early to call, but the vaccine is still solid and likely to be able to fight that variant. And there is nothing to worry about, and it will be at least a few weeks that we can talk about it, or we will have more data. At the same time, Pfizer said even if we need a new vaccine, it will take around 100 days. Even China also said that their vaccine is still effective against that variant. Markets recovered on Monday, and things went well all the way until the end of the US session. Tuesday, during the Asian session, the CEO of the company Moderna said in an interview that vaccines will struggle with the new variant. And things have changed dramatically again. Asia tumbled, the US and Europe futures also lost over 1% before the opening, and the decline continued until the end of the US session. Dow Jones lost over 650 or 652 points at the close. We saw also S&P losing over 2%, and Nasdaq closed with close to 1.5%. However, what led to this deeper decline on Tuesday during the U.S. session was the Federal Reserve, or the Federal Reserve Chair Jerome Powell, and this is not related to COVID at all, but it did add more weight on the markets, side by side, of course, with COVID news. Jerome Powell, the Federal Reserve Chairman, in his Q&A session in front of the Congress, or his testimony in front of the Congress, finally admitted that it is time to retire the term transitory inflation, admitting that inflation is well above the target for some time, and we might have to deal with it soon. At the same time, he also added, we will discuss faster tapering and may wrap QE earlier than we thought, or earlier than expected, or earlier than planned by few months. This sentence is the key for the next not only days or weeks, but also for the next few months in the market. Here, I will refer back to the chart that I posted back in June and also during the previous video. If you did not watch that video, I also encourage you to watch it. And I would like to stress again that markets will always price in central banks' policies in advance as long as there are no surprises. The US dollar has been going up since June, when the Federal Reserve hinted about the QE tapering, and it's been going up since then until today. This is what we mean by pricing in advance. Market participants are pricing in the Federal Reserve tapering before the actual decision that actually happened in November. And the previous estimates pointed to at least 6 months until the end of the tapering, until the Federal Reserve wrapped the whole QE. So markets were trending, or at least trading gradually, to price in such a decision in advance. But yesterday, when the Federal Reserve Chair Jerome Powell said we might wrap QE faster, and we might end it within faster than a few months earlier than expected, that means the expectation, or the market expectations, are now different than it was back in June, and it's different than it was in November, and it's different than it was even yesterday. This means that the markets will experience another wave of pricing in not only faster QE tapering, but wrapping QE with a potential rate hike during tapering, or even right after tapering. At least this is what the bond market is telling us. Yesterday, the 2-year yields spiked up back to 0.6%, while the 10-year yield dropped back all the way to 1.41%, while the 30-year yields in the US also touched around 1.77. Now, what you must do here is go back again to the same chart that I referred to before, back in 2014, when the Federal Reserve started the tapering, and have a look how the market reacted from the day of the hint that they will be tapering soon, or they will be tapering in 6 months, until the actual date of that decision. How currencies moved, or metals, or stocks, or indices, or whatever asset you would like. Just have a look and go back and have a look and try to plot it on the chart, just like I did, or just like in the chart below, and you will figure out where the market is heading, at least until March of next year. And bear in mind here other central banks' policies, which will help you even more in your trading when you look at the bigger picture first before looking into the short-term trades. I have prepared a longer video for this week before doing this video, but I changed it because, at least after the Federal Reserve remarks, as this is the most, or I think at least in my honest opinion, this is the most important thing that happened over the past few hours, rather than just talk about past events and short-term trades. I hope that you guys find value in this video, and if you have any questions, please leave them in the comments below, and I will try to answer them as soon as possible, as soon as I can. Thank you for watching once again, and I'll see you next time.